Have you ever felt proud looking at your bank balance, thinking you're being smart with your money, only to discover you've been making one of the most dangerous financial mistakes? I'm Andrew Meet Rich, and I used to be that guy. I used to be broke, stressed, and ashamed to check my bank balance. I made every money mistake you can think of, including this massive one we're talking about today. But I figured it out, and now I want to help you do the same. Today, we're diving into why keeping too much cash in your bank account is actually destroying your financial future. I'll show you exactly how much is too much, what it's costing you, and most importantly, what to do instead. Even if this topic doesn't feel super relevant to your situation right now, the next insight could completely change your life. Hit that like button if you're ready to stop letting your money be lazy. Let me tell you about Sarah, a hardworking teacher I met last year. She came to me feeling proud because she'd saved $45,000. Andrew, she said, I finally feel secure. Look at my bank balance. But when we sat down and actually looked at her numbers, I had to deliver some tough news. That money she was so proud of, it was losing value every single day. While Sarah worked overtime, sacrificed weekends, and stressed about every dollar, her money was sitting in her account doing absolutely nothing. Worse, inflation was eating away at its purchasing power. Sarah thought she was being responsible, but she'd fallen into what I call the lazy money trap. And here's where most people get completely stuck. Here's the brutal truth about cash. It's the laziest employee you'll ever hire. Think about this. You work your tail off for weeks, maybe months, to save $10,000. You put in the sweat, the stress, the mental energy, then you dump that hard-earned money into a bank account where it sits there like a couch potato, doing absolutely nothing for you. After a whole year of your money being lazy, you still have the same $10,000. But here's the kicker. Because of inflation, that $10,000 now buys you less than it did 12 months ago. Your money didn't just do nothing, it actually went backwards while you were out there grinding. What if instead of letting your money be lazy, you put it somewhere it could work as hard as you do? Now imagine this scenario instead. You take that same 10,000 and invest it somewhere, generating 8% returns. I'll show you exactly how to do this safely in just a minute. After 1 year, your 10,000 becomes 10,800. The second year, that grows to 11,664. Each year, you're earning money on money you no longer have to work for. Here's the mind-blowing part. Over 10 years, your lazy cash stays at exactly $10,000. But the money you put to work grows to over $21,000. That's an extra $11,000 you never had to sacrifice another weekend to earn. This is compound interest working for you instead of against you, and it's one of the biggest reasons keeping too much in the bank is financial self-sabotage. But Andrew, what about emergencies? I hear this all the time. And yes, you absolutely need an emergency fund. But here's where people mess up massively. They think every dollar in their account is emergency money, when most of it is just fear money losing value every day. Your real emergency fund should cover your core living expenses for 3 to 6 months. I'm talking rent or mortgage, groceries, essential bills, minimum debt payments. Strip away everything else and multiply that number by 3 for basic protection, or 6 if you want more security. If you're self-employed, maybe 9 months. That's it. Anything beyond that isn't protection, it's just money being wasted. I've seen people with $70,000 calling it their emergency fund when their real emergency fund was less than $20,000. Here's another trap that got me recently, and it might surprise you. Having too much cash visible in your account actually tricks you into spending more. When you see $15,000 sitting there, your brain goes, I'm rich, I can afford those shoes. But that money wasn't meant for spending. It was your house deposit or just cash you hadn't figured out what to do with yet. I experienced this firsthand when I switched banks and temporarily lost my automation system. Within weeks, my spending increased because I could see all that money just sitting there. The solution? Get your money out of sight before you can spend it unnecessarily. Automate everything so investments happen before you even see the cash. When money moves automatically into investments and separate accounts, you're way less likely to make those impulse decisions that derail your financial future. Here's something that'll shock you about keeping too much cash. Government insurance won't protect you beyond certain limits. In the US, you're only covered up to $250,000 through FDIC protection. In the UK, it's £85,000. If your bank goes under and you have more than that, you could lose everything above those limits. But here's the real question. Why do you need massive amounts sitting idle in the first place? Beyond your emergency fund, the only reason is if you're saving for something specific in the next 5 years, like a house down payment or wedding. For goals that far out, you can't risk stock market volatility, but anything you won't need for at least 5 years should be invested where it can grow instead of losing value to inflation. The final reason might be the scariest. Large amounts of visible cash make you a target for increasingly sophisticated scams. I read about a multimillionaire who got scammed out of over $1 million through fake WhatsApp groups and cryptocurrency schemes. The scammers even impersonated celebrities and created fake investment opportunities. This isn't about being smart or dumb, it's about reducing unnecessary risk. The more cash you have sitting around, the more attractive you become to scammers. The solution is simple. Get your money working in legitimate investments you understand, rather than leaving it vulnerable in accounts where it's not even growing. Look, the takeaway isn't to panic and move everything tomorrow, but given everything we've covered, it's time to be intentional about where your money lives. Start with these 3 steps. First, calculate your real emergency fund number and park it in a high-interest savings account, earning 3 to 4%. Second, identify your short-term goals for the next 5 years and save for those separately. Third, everything else needs to go into diversified index funds through tax-advantaged accounts. Your money should work as hard as you do. Every day you wait is another day of potential growth you're missing. Small shifts like this create massive change over time. Don't let fear keep your money lazy while you're out there grinding. Tomorrow, we're talking about the biggest investment mistake I see people make in their 40s and why it could cost you decades of wealth building.